This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Europe will need to import up to 160 additional liquefied natural gas cargoes this winter due to lower storage and a decline in pipeline flows from Russia and Algeria, according to analysts and data, deepening its dependency on U.S. gas. LNG imports will jump to 820 tankers this year from 660 last year, representing 48% of all EU gas supply, with analysts forecasting need for around 16 billion cubic meters (BCM) this winter. A decade ago, LNG covered only 10% of EU gas needs, and the share stood at 23% in 2021 before Russia invaded Ukraine and the bloc cut Russian pipeline imports.
Oil prices rose by about 1% on Monday after OPEC+'s planned production increase for November was more modest than expected, tempering some concerns about supply additions, though a soft outlook for demand is likely to cap near-term gains. Brent crude futures climbed 71 cents, or 1.1%, to $65.24 a barrel by 13:16 GMT, while U.S. West Texas Intermediate crude was at $61.47, up 59 cents, or 1%. The market was expecting a somewhat larger increase from OPEC+ as shown in the structure last week, said Janiv Shah, an analyst at Ristad.
Moving on to the top news in the energy sector.
Shares in Japanese renewable energy company Renova plunged more than 11% on Monday, making it the biggest loser on the Tokyo Stock Exchange's prime market, after Sane Takaichi looked set to become Japan's next prime minister. The sharp drop came amid speculation that a Takaichi leadership could hurt prospects for conventional solar-related businesses, as she has been skeptical of big solar projects. Takaichi has called for limits on large solar panel projects, arguing many panels are made overseas, notably in China, and mega solar installations could damage Japan's scenery and natural environment.
Saudi Arabia, the world's leading oil exporter, has left the official selling price of its flagship Arab Light crude to Asia unchanged, a day after OPEC+ agreed to a modest increase in oil production. The kingdom set the November official price at $2.20 a barrel above the Oman-Dubai average, matching the level set for October, according to a document reviewed by Reuters. The November prices for other grades, Arab Medium and Arab Heavy, fell by 30 cents to $1.45 and 10 cents a barrel, while that for Arab Extra Light remained unchanged at $2.50 a barrel, the document said. Next, we have the top news in metal markets. Gold surged to an all-time high above $3,900 per ounce on Monday, buoyed by growing expectations of a Federal Reserve rate cut this month, as well as economic and political uncertainty in the U.S., France and Japan. Spot gold was up 1.8% to $3,956.42 per ounce as of 11:04 a.m. Eastern Time, 15:04 GMT, after hitting a high of $3,958.57 earlier in the session. U.S. gold futures for December delivery rose 1.8% to $3,979.80 per ounce. Political developments in France, rising Japanese yields amid inflation concerns and the ongoing U.S. government shutdown are all contributing to gold's rally, said Morex analyst Edward Mayer.
The tin market is once again bubbling on supply chain trouble, this time in Indonesia, where the government has launched a sweeping clampdown on illegal mining. London Metal Exchange, LME, 3-month tin has jumped to over $37,500 per metric ton, the highest level since April when the supply threat was to the busy mine in Democratic Republic of Congo. The latest price kicker was provided by Indonesian President Prabowo Subianto, who said the government aims to close 1,000 illegal mines in the tin-rich islands of Bangka and Belitung.
We will now look at the top news in the agricultural sector.
Chicago soybean futures edged up on Monday, with strength in crude oil helping the market to recover from a fall on Friday while traders await updates on the U.S. harvest and government aid to compensate soy farmers for China shunning U.S. supplies. Corn and wheat also rose, with wheat drawing support from news of a Saudi purchase in an import tender. The most active soybean contract on the Chicago Board of Trade was up 0.5% at $10.22 minus 3/4 a bushel by 11:49 GMT. Soybeans, widely used for biodiesel fuel via byproduct soy oil, were supported by a rise in the price of crude oil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.